Hello, everybody. This is Tom Hutchins with the Angel Oak Mortgage Solutions. It's a little before 1 o'clock, or it's right at 1 o'clock, but I see a lot of people still logging in, so we'll give everybody another minute or so to get situated. All right, still a lot of people logging in, so give us another minute and then we'll get going. All right, we're a couple minutes after 1 o'clock Eastern time, so I think we're going to go ahead and get started. What's that, John? All right, my name is Tom Hutchins. I'm EVP of Production at Angel Oak Mortgage Solutions. Really excited to have everybody with us today. As you know, this is going to be kind of a town hall format. We received a lot of questions, and we're going to go through those questions as we go through this, but really excited for, first of all, your interest in joining us today, but also who we have on this webinar with us. And so I just wanted to do kind of a quick introduction. First is Scott Gruebele. Scott is a senior account executive down in South Florida. Wave to everybody, Scott, so they know who you are.
How you doing, everybody? Happy to join everybody today. Going to speak a little bit as we go on to the call about selling non-QM in today's environment and today's market and what we're seeing live out there in the field.
Yep, good stuff. Then I also wanted to introduce Manish Valecha. I get that right, Manish?
Yeah, that's right, Tom. Thanks. Thanks for the intro. And I think everybody knows, at Angel Oak, we're an umbrella of companies. So I work on the capital advisor side, and really my role is working with our institutional investors that invest in our non-QM securitizations. Sort of the head of client solutions and working to educate them about non-QM.
Yeah, and that's awesome, Manish. Very happy to have you. You know, we talk about a lot of times about how we are this vertically integrated organization, meaning all the way from originations through securitizations. And Manish is really an expert on the securitization piece and works directly with investors. So we're going to get a lot of insight into that and what's happening in today's non-QM market. And then third is Jeanmonod, our regional vice president of sales. John manages and runs our Texas and Florida markets. Say hello, John.
Hey, good morning, Tom and Manish and Scott and everyone on the call. Thank you. I was on a landline actually and got kicked off, so I apologize for that if you asked me anything earlier. So I'm actually here today in our Dallas Ops Center. So been with Angel Oak for 6 years and was fortunate enough to work with Tom in a future wholesale experience also. So I look forward to today going over the programs, and going into pretty good detail on those programs along with Scott. So, and I've had the opportunity to work with Scott for, well over 4 years. So hopefully you'll get a lot from that today.
Yep. Awesome. And then I just, this is a town hall format. I really want to thank everybody. When you registered, we had a ton of questions that have been submitted. And so we're going to address, in fact, the majority of them were around products and programs and guidelines and things like that. So we're going to spend a lot of time on those. And I think we're going to make sure that we get all of the questions that we've received, get those answered for you. If you have any questions that you want to make sure we answer, there's a little questions box there in the go to webinar section. Just submit those, and we'll do our best to get to them. But this is meant to be interactive. Thanks again for joining us. I wanted to really just start by talking about really what's happened in 2020. Obviously people know what happened in March when the COVID-19 pandemic began. It caught a lot of people off guard. Most businesses were looking at how you would work remote in the new world order. But then mid-March happened, and when states started shutting down businesses and virtually shutting down economies, everyone saw the non-QM business, including Angel Oak, have to be put on pause. And so we're going to talk a little bit more about those details and what all that, how that happened and why that happened. But I just really kind of want to bring us to today. We're to July now. We were on pause. We brought our products and programs back out late the last week of April and really in earnest the first week of May. So we're 2 months back into originating new non-QM loans, and that's what we're going to spend the majority of our time today, just talking about where we are today, where we see this going in the future. Non-QM, if you don't know, I'll give you just a brief history on Angel Oak. We started non-QM lending in 2013, so we've been doing this for 7 years, exclusively non-QM, and that relationship with Angel Oak Capital and Manish and that group has really kind of been a differentiator. But we saw this opportunity a long time ago. Certainly non-QM and COVID has brought some challenges, but we're extremely optimistic about where the future is headed for non-QM. So with that, anything else you guys want to add about what has happened in the March to now timeframe?
Nope, good, Tom.
Okay, so Manish, there were quite a few questions about the markets and the non-QM capital markets. So if I could just start with you, you're kind of our liaison between the end investors, but if I can just ask you a few questions, I think that'd be kind of a good way to get this thing going. But so one of the questions, and we actually saw this more than once, was what has happened with non-QM securitizations since COVID?
Sure, yeah, Tom. So, since COVID, what's really happened overall, and if you think about the market, has just been sort of a wave of liquidity that's been put into the system through the Fed and through policymakers just generally. And what that's done has created a significant amount of demand for any product that has yield associated with it. And so when you think about non-QM within that broader context, there's just been a significant amount of demand that's been created by the end investors. Obviously, we work with those end investors over at Capital, which are pensions and banks and insurance companies and so forth that still have to meet their liabilities in a zero interest rate world. So that's sort of the broader context. Now, within sort of the micro, the non-QM sector specifically, you talk about 2013 and how we've started. We've really spent a lot of time educating investors, developing a broad investor base for non-QM, and kind of understanding how the product is different, what makes it unique, and what the credit profile is. And so that education, coupled with this wave of liquidity that's been put into the system, has created a significant amount of demand for non-QM. So as you're seeing securitizations come into the market, into capital markets, they're significantly oversubscribed at the top of the capital structure. And as you go further down in the capital structure to the bonds that are sort of exposed to the most risk, but also have the highest yields, and it spans the investor spectrum from pensions to hedge funds and to investors that want to take a lot more risk. So bottom line is the market has come back. It's very strong, and there's a lot of demand for these bonds that are obviously collateralized by non-QM loans.
Yep, good stuff. So Angel Oak has issued, what is it, 2 securitizations during this COVID environment. Can you maybe just speak to some of the specifics around those?
Sure. Actually, so Tom, we've actually done 3 securitizations this year. We've done two sort of post the March sell-off, and what we've seen in getting those securitizations done is, again, is a lot of appetite, a lot of understanding for Angel Oak and how we've sort of integrated the origination to the capital markets. So, I would sort of say we're at an advantage relative to others because our securitizations tend to look the same. They tend to, have the same sort of credit profile and so forth that they've historically had. So they've been met with significant demand from the buyer base. I will say, just to be fully transparent, that it's been a significantly more challenging educational process in terms of how to think about borrowers that are in a forbearance plan, or how do we start thinking about adjusting our guidelines, thinking about borrowers in the future. So there has been just a lot more education, but I think a lot of the work that we've done since 2013, a lot of the investors that we've built rapport with and so forth have been big supporters of the program, after that March sell-off.
Yep, that's awesome. And then what do you just think about the market during, this pandemic doesn't seem to be ending. It's kind of like now it's extending. People are saying it might be a W curve versus a V curve recovery. What do you think about the stability in, where we are now? Because now we're starting to hear about some newer markets or markets shutting down once again or pulling back on what's allowed to reopen and things like that. What are your thoughts around that?
Sure. So yeah. So I mean, I think your question is right. I mean, it's like, what do you think about the new normal, right, that we're all living in now? And I would just say, if you think about the fact that you've got these liabilities for these investors, that they still need to meet these liabilities. In fact, it's just gotten that much harder as interest rates have gone to zero. They're sort of thinking about things from a relative value perspective, and where do you think sort of is the safest place to put that dollar to get that yield? And certainly, the non-QM borrower, the U.S. homeowner, there's a lot of tailwinds that support that sector relative to other areas of the economy. So if you want to think about retail, obviously that gets a lot of headlines, and specific other areas, maybe perhaps commercial real estate and consumer and so forth. But the U.S. homeowner has a lot of tailwinds supporting it, from everything from the stimulus that's been put in place from the government, to the idea that this pandemic has made homeownership that much more in demand. Obviously, people want to shelter in place during a pandemic. So it's all those sorts of things that make non-QM sort of go or sort of move up to the top of the list from an investor standpoint.
Manish, just from your seat and your perspective, a lot of the non-QM lenders that were in the space pre-COVID, pre-pandemic, they're not only did they put it on pause, but they haven't come back. What do you see as, I mean, do you have any thoughts on as to why that might be?
Yeah, I mean, look, I think you had this period of time where they're right there in the middle toward the end of March, where you had a flight to cash. Everyone sort of scaled back, and everyone kind of looked to get liquidity where they could get liquidity. And look, I mean, at the end of the day, the non-QM space had grown significantly over the past few years, and a lot of entrants had come into the space. And we, having been here since 2013, had seen them come in. So when there is a little bit of turbulence, when there is a little bit of turmoil, if you're sort of newer to the space, you're not committed to the space, and maybe your platform is a much broader platform where non-QM is sort of a smaller business, I think it sort of makes sense to maybe pull back, to maybe scale back, to go back to what you were focusing. And for us at Angel Oak, and being integrated through capital directly to the end investor, and obviously having made the commitment to this business that we've made, I think that's absolutely the source of differentiation for us relative to other folks that may have sort of been more tourists to the space.
Yeah, we've said it all along. There's been a lot of people that maybe had dipped their toes into non-QM, and it was easy to pull your toe out versus Angel Oak, which we've been all in the whole time. And it's interesting you talk about you've been educating investors during this period. I mean, that's what you've been doing all along, right? And that's what we've been doing all along as well, is educating originators on what non-QM looks like today. So sounds like we're doing a lot of similar things.
Exactly.
All right, well, good. Anything else just from a market overall perspective that you'd like to add in that maybe the questions didn't ask specifically?
Well, I mean, I think I just want to reiterate that, there's been a lot of effort put into building the strong investor base that we have over the past few years. Since it's our first securitization in 2015, now to having done 3 securitizations in 2020. We did 6 securitizations last year. So we have a very strong brand presence, and having spoken to the investor base, I would just say that they're expecting us to issue more deals, to continue to be a player in the market, and there is that consistency that they like to see from us.
Yep, agreed. All right, that's good stuff. All right, so thanks for that, Manish. And kind of changing gears a little bit to John. John, can you maybe share your screen? And a lot of the questions we got were around products, programs, guidelines, but maybe just start looking at showing people the website and things like that, because I think those are pretty good resources that anybody on this call would just walk away with that. And you'll.
Yeah, Tom. Yeah, great. Good afternoon, everyone. Again, Jeanmonod, Regional Vice President, here with Scott Gruebele also. So Scott and I are going to take you through the website, programs, and how we can help you market the non-QM space. So Tom, just can you see the screen here?
Yes, sure can.
Okay, perfect. So obviously, nice, clean, easy website to use, angeloakms.com for Angel Oak Mortgage Solutions. A couple things we'll show you before we get to the programs, because I believe what has always separated Angel Oak from everyone else in the industry, it's the Scott Gruebeles of the world. It's the AE in the field, giving you the confidence to work with them. So you're going to want to know where I can find my local account executive. And just clicking on find an account executive, we'll go to Florida here, and here's your list of account executives that we have available to you in Florida. But we have our heat map for all the states we're approved in, and the local account executives there. And if there's no local account executive, we have an inside sales team that'd be happy to take care of you. So that's where you can find your local expert. So we're going to talk about a couple of tools we have available to you also. And the ones that every AE loves out there is our quick quote tool. And using this you can slide it for your loan amount, put in a credit score, an LTV, housing history. Ask you a half a dozen questions, full doc, owner occupied, and it'll display a rate for you. And this is a borrower pay rate of 4.75. If you signed in and you have a lender paid comp plan with us of anywhere from a half to 1, it'll show you what your comp plan is there. So and if you decided your borrower cannot go full doc.
Not to interrupt, but that was one of our questions is, do we offer lender paid compensation?
Yep. So yes, the answer is yes. And you can see up here, we're offering lender paid compensation up to 2.75. 1% of that 2.75 can be priced into your rate. The rest would have to be charged as a discount to the borrower.
Okay, great.
Good question. So, and let's just say your borrower can't qualify going full doc. Just switch it to a 24-month bank statement program, and it'll show you the rate there. So it's really, really easy, very intuitive. Scott, anything to add regarding quick quote?
Yeah, no, I mean, just great tool. One thing I recommend whenever I'm out in the field doing presentations, talking to, loan officers, brokers, is definitely save this to your desktop. It's so easy. You can hop in there when you have a live borrower on the line, literally put in the scenario and be able to spit out some pricing instantly. In addition, it'll tell you, if you scroll down a little bit, some general requirements on the program. And then, of course, if you have anything a little bit more high level, you could reach out to your account executives. But it's an amazing tool. I get called a lot, asked, hey, do you guys have a matrix you can send us? We make it easy. It's all online. You can hop right on here and at the click of a button, have everything you need right at your fingertips.
And you can even put it on your phone.
And something else, just looking at this screen, John, you clicked a 65% LTV, but right next to it, it says the maximum LTV. So like Scott said, if you're speaking to a borrower and they're asking for a 70, 75, you could get the answer on that scenario, but you could say, but we could also look at an 85. So it tells you right there, without you having to dig too deep, what the maximum loan to value would be for that borrower. And then the second piece is the submit quick qual is really easy as well. I don't know if you want to talk about that while we're here, John.
Yeah, so great. And Scott, I'm going to defer to you on this as far as, the easy steps it can take to submit to Angel Oak, what we call a quick qual, what most people maybe used to hearing it called a pre-qual. So we're basically, it's a pre-underwrite. Scott, I'll defer to you here.
Yeah, thanks. So as you can see, it's all seamless. It works together. So if you're pricing out that scenario, now keeping in mind, any non-QM loans have to be pre-qualified by your AE. But it's as simple as clicking that button, and it'll slide right down to this portion of the screen, and you can begin to input all of the details of your scenario. Your product and pricing is there. You'll choose your account executive, enter your company information, loan officer, NMLS ID, et cetera. And then as you scroll down further, you'll be able to attach securely your 1008 credit report, 1003, even your 3.2 file, which we encourage, because when you attach your 3.2 file and submit it, we'll actually give you findings. This is, that I know of, the first non-QM AUS that will give you some general findings when you upload the 3.2 file into the system. So once you submit this, it goes directly to your account executive. Your account executive will then take the file, put together the pre-qualification. If it's a bank statement loan, you can attach your bank statements here as well, and the AE will do the income calculation for you and get back to you, hopefully with a full broken down pre-qualification with all of your pricing and your terms.
So one of the things, we have up here, one of the things I do want to touch on, we talked about and again, everything's pretty easy to navigate through the website. So we do have an agency quick pricer here. One of the things we did during our pause on the non-QM side is we have a lot of really great brokers we work with, and during that time, we understand where refis were going and the turn times with regards to our broker family out there. And so we did launch Freddie Mac from the agency world to help them get through their pipeline of refis and purchases for us. So we do have quick pricer, but I want to be clear here, our focus is non-QM. We did this and we're still in this agency business, but the focus you'll see from us from now into the end of time is non-QM. So I just want to make sure I'm clear with that with everyone here. So again, everything's available to you. Your find account executive, your application, your resources and documents, the AMCs that we have are here. But let's specifically talk about the programs we have available to you. So
hey John, if I could interrupt before, because one of the questions we got is non-QM lending back full steam? And that was the question. And so I just kind of wanted to address that. We're going to take you through the products that we have available today, but we did not come back with any non-QM products until, as I mentioned earlier, late April, early May. And we are seeing enhancements and new products and new guidelines coming out weekly at this point. So that's really why we're even showing you on the website, because you can go to the website we keep that updated. You probably couldn't even keep up with all the enhancements that we're putting out there. So is it full steam? No, but we have very aggressive non-QM products. And as the market and really the economy continues to improve, we're going to see the continued, we're going to bring back all of our products. I can't tell you exactly when. There's only a couple even right now that are missing, our Portfolio Select and our non-prime, but those are coming back. I just can't tell you when today, but this is a great place on our website to check. So sorry, John.
Yeah, Tom, it's a great point, but all the more reason by really getting to know your local account executive to continue to keep you up to date with those enhancements, Tom. And Tom, since we rolled out since the end of April, we've had a dozen enhancements. So they're coming fast and furious. So, just again, stay tuned, because what we say here today will probably change somewhere in the next couple of days. So it's a fun time right now to see how this is coming back and how quickly it is coming back. So, prior to the COVID and even post or during COVID now, this bank statement still continues to be our most popular program. There are 17 to 18 million self-employed borrowers out there today, and that statistic is probably going to grow before the end of the year. It's in some cases we've heard that might triple by the end of this year. So self-employed borrowers are out there. They're a tenacious borrower, and they will survive. If anyone does, it's that self-employed borrower. So let me get into a little bit of details about our program. We go down loan amounts up to $3 million, LTVs up to 85%, and that's 85% one loan, no MI. We do require a 4-year seasoning on your bankruptcies and foreclosures. One of the things we did introduce, I think it was about a week and a half ago, we require 24 months of bank statements, but a week and a half ago, we added personal bank statements to that. So we will qualify the borrower using 24 months of personal bank statements or 24 months of business bank statements. We'll go down loan amounts down to $150,000. We'll do purchase, refis, or cash outs. So we've been doing this, bank statements for probably 5 years now. So you might even have some borrowers that might want to get into the cash out of the equity that they've built up in their home over the last half a dozen years, or however they've lived in that property. Tax returns are not required. We'll do it owner-occupied second home and investment properties. Scott, again, this is our most popular program. So, one of the things we want to do today also is kind of inform you on what the street's seeing on this. So, Scott, I'll turn over, the fun part to you from a standpoint of what you're seeing with your customers and clients.
Yeah, thanks, John. So yeah, guys, as John mentioned, the bank statement program has always been probably, our most popular program, most amount of volume driven. And as you can see, I'm really excited about it because we're back pretty close to pre-COVID levels. I mean, I'd say maybe 95% there. And even before COVID, the bank statement sector, the self-employed borrower out there was really underserved. And even more so, I think today, what I'm seeing in the field is a lot of these self-employed borrowers, those that are still looking for homes, are still out there shopping for properties. I've always mentioned, our average bank statement loan was over a $300,000 loan amount, depending on when you looked at it. LTVs were always 80%, in most cases less. Credit score, I believe, was in the 700s. These are good borrowers. And depending on your market, these are the borrowers that are buying the higher priced homes. So they're good loan amounts for the realtor, the loan officer, et cetera. It's not usually your W-2 wage earner that's buying $1 million home. It's usually your self-employed borrower. So it's been an underserved community forever. It's still there. If anything, I think there's a little, pent up demand there with COVID, because I've seen a lot of these borrowers are seeing the frenzy going on out there on the agency side with your rate and term refis and your cash out refis, and they want a piece of it. You have a lot of borrowers that took bank statement loans out 3, 4, 5 years ago that can refi into much better rates today. So there's opportunity there for anybody on the call. If you've done any bank statement loans, reach back out to those borrowers and see if they want to refi into some better rates. And then on the purchase side, you know, we've gotten a lot of, I always loved doing presentations to realtors. I get, believe it or not, a lot of calls from realtors asking about these products and programs. And the bank statement program is always the one that they ask about. They're still out there marketing this product to potential buyers. So I think there's a big opportunity there for loan officers and mortgage brokers to continue to market this out there to your referral sources, because we all know once this refi boom dies down a little bit, the purchases are what's going to continue to drive us through.
Yeah, and one of the things we showed you on the quick qual there and how to get a pre-qual back from us, the great feature that Angel Oak provides to you is we will calculate that income for you. So you don't have to go through the bank statements. We have a team of experts solely dedicated to calculating that bank statement income for you. So, you know, when you reach out to your account executive, you know, that's one of the things that they'll share with you is how easy we make it to work with us from a bank statement calculation standpoint.
So, John, while you're on,
just,
if I could, there was just a question that had come through. What do you want to see for owners of businesses like salons, restaurants, et cetera, that have been closed and are just now reopening? Maybe, Scott, you could just touch on from a guideline perspective, or John, either, obviously.
Yeah, go ahead, Scott.
Yeah, great question. So what we're looking for with those businesses is we want to see income coming back to pre-COVID levels. A lot of these businesses are back up and running. They have revenue coming in, deposits coming in. So we're looking for the most recent bank statement, in some cases, the most recent month's transaction history, to see that the business is back up and running, doors are open, and the revenue is flowing back to pre-COVID levels or close to it. That's basically what we're looking for on those. What I'm finding in the field, guys, is that most of the bank statement loans I'm looking at, really the majority of them, I would say, did not take as big of a hit as you might expect in terms of deposits. A lot of these companies with this gig economy we're in were web-based companies, not necessarily your brick and mortar, you know, restaurant or bar. They're service providers, they're attorneys working from a remote office or working from home, you know, web developers, et cetera. And when we're looking at the deposits, a lot of them really did not skip a beat during COVID. Those that did were able to have reopened, and their revenue is starting to flow again.
Yep, good stuff.
So as we continue down our program, Tom, any more questions with regards to bank statements at all, or?
No. I think you covered most of them.
Great. Our next program here that we have is our investor cash flow program. So it's a really slick program for your seasoned investor. We'll also, if it's a first-time investor, we will do that. We do require that they do have a primary residence, but we'll go up to a 70% LTV with scores starting at a 700. We don't require, the great thing about this program is we only go off how that property cash flows. No income, no bank statements, just how the property cash flows. And if it cash flows as a 1 to 1.1 ratio, we will allow a 70% LTV on that program. Properties can be vested in an LLC that borrower or borrowers, so we'll allow up to 2 borrowers on that. They still have to personally guarantee the loan, meaning they have to qualify trade line wise and credit score wise. We'll do loans up to $1 million. Minimum loan amount is $100,000. Another great feature on this, if you have borrowers who have more than 10 properties financed, we don't care. We'll do up to 5 properties for that borrower. So that's a great feature. We allow non-warrantable condos. Again, purchase, rate and term, and cash outs on this program also. So you might have a seasoned investor who wants to pull out some cash to continue to buy investment properties. This is a great program for them. Scott, you know, what are you seeing and hearing on the street today about this program versus pre-COVID?
Yeah. So I am seeing there's a lot of opportunities out there is what I'm seeing, guys. There's a lot of investors that are looking to take advantage of opportunities in this environment right now, and they're buying properties. And there's also a lot of investors, and we saw this pre-COVID and continues today, that are refinancing. So we all know that for a lot, going back a few years, anybody who was looking to purchase an investment property, especially your experienced investor that had multiple investment properties or portfolio, a lot of those guys were using hard money loans to purchase these properties. They paid, high amount of points up front. Their rates can be anywhere from 9% and up. So those borrowers are now aware that this program is available. And we had a little refi boom going just before COVID, and we're seeing it continue now, where a lot of those guys are refinancing out of those hard money loans into the investor cash flow, getting much better terms. In a lot of cases, they have balloons coming up as well, and they have no choice. They really need to refinance out. So there's a lot of opportunity there. A couple of highlights I want to point out that you mentioned, John, is we take 100% of the rental income on the 1007 to calculate the debt service ratio. That's big. And we can go up to 70% loan to value on this program right now, which is really strong in the marketplace.
So one question that came in while you guys were talking was just seasoning on a cash out, an investor property. What would that be, Scott?
That's going to be 12 months. 12 months seasoning on the property on a cash out refinance on this program.
Okay. Good stuff. There's a few other questions around bank statements, but I'll get back to those in a couple minutes.
Sure. And then one of our last but not least favorite programs is our Platinum program. It's a jumbo. It's more focused on jumbo, but we do go down to $250,000 loan amount. We'll go up to 90% LTVs. And again, that's one loan, no MI.
And it's a full doc loan, John. I've seen a bunch of questions about, do you offer full doc? So this is full doc. Everybody understands that.
So this is our full doc program. So if they're self-employed, we're going to need their tax returns, or if they're W-2, obviously W-2. So, but this is our full doc program, and this is one recently that just got enhanced. But full doc, 660 scores, all the way up to 90% LTVs. And loan amounts up to $3 million. So, this is a real a need in the marketplace for this. And Scott, tell us some of the needs that you're seeing today in the market for this Platinum product.
I'm super excited about Platinum and the re-release of the Platinum program, because there's a huge void in the market right now, as we all know, and everybody on the call. In the jumbo market, you basically, as of today, have the big banks, your Chase, your Wells, doing prime jumbo programs, and then there was nothing else out there until we rolled out the Platinum program, and I don't know of many others that are available. So I think this program is going to be huge for everybody on this call. It's filling a huge void. As you can see, the loan amount goes up to $3 million. It's a just missed prime jumbo program. We can, by the way, go down to $250,000. So if you have any full doc loans that need, don't make it agency and are just missing, we can do them here as well. And the pricing is really aggressive on the program, in my opinion. You have, rates starting in the 4s. More importantly, the LTV goes up to 90%. So we're talking about a jumbo program up to 90% LTV with no MI. That's aggressively priced. I just think there's huge opportunity out in the market right now with this program. Just what I'm seeing in the field is this entire period of time, the last 3 or 4 months, I got a ton of phone calls for people looking for jumbo programs. I'm now calling everybody back on those calls because we have this program available, and we're getting a lot of loans booked on the program.
So two questions that have come through that I think are important. One is, what's the DTI requirement on Platinum? And then secondly, where can they find pricing for Platinum?
Great question. So the DTI on Platinum is 50%, which is awesome in the industry. 50% DTI. And then, of course, you can price this, as John's showing you now on the screen, right on the nonQM quick quote. Same engine we looked at before.
Hey, and Tom, and it's a real volatile marketplace with that jumbo, Tom. And even just this morning, one of those big banks that Scott just mentioned requires, I think it started on July 1st. They require any jumbo loan to have $1 million in assets. So
held at that bank, even not even just and it has to be held at that bank to get a loan from them. So it's not just having $1 million, having $1 million with them. So yeah, we're really, as Scott said, very excited about this Platinum product, and it is on our quick quote. When you select full doc, our Platinum Jumbo is the product and program that'll show up.
Tom, I know you mentioned a couple. That's really the programs that we have, but one of the things I really want to emphasize is that you almost bookmark programs, because they are changing weekly, if not daily. So it's a really exciting time right now in the nonQM space, and it's just I feel like we're just getting started.
And I really, the last 3 minutes, I've gotten so many very specific questions about products. Please go to the quick quote. Literally, well, you can do that, and just it'll show you what the. And I didn't mean you, John. I'm actually telling the people on the call. But just quick quote is where all this information is. You can put in the FICO and the LTV, and you want to cash out, and it's going to tell you that you can do that and what the maximum LTV is. So, and you can switch it from bank statements to full doc, or whatever income you want. So one kind of a consistent question going back to bank statements, if you guys could touch on, is how is expense factors and deposits? How does that work?
Go ahead, Scotty. I'll defer to you.
Yeah, so we have two options, of course. We have personal bank statements, we have business bank statements. Business bank statements is pretty cut and dry. We're going to look at the business itself, what type of industry it's in. We have a questionnaire that we send out to the borrower. We have the borrower complete for us, where he basically tells us how many employees he has, quick snapshot of what the business does, what they're all about, and also we ask them to input their expense ratio. So we're going to look at it business by business, and then apply an expense ratio from there. We have a few different categories that we look at, going anywhere starting at 30% expense ratio and going up to 70% for some of those businesses like restaurants that have obviously run on much smaller margins. So again, we're just going to look at it loan by loan. That's going to be done at the pre-qual level, and your account executive will work that out with you. What was the second part of that question, Tom?
Just are 100% of deposits used, or a lot of the question was the timing, 12 months versus 24, and well, go ahead and answer that, and then I'll the other piece that seems to be consistent.
Yeah, so jumping over to the personal bank statement side, if you have a business owner going personal bank statements, and a lot of those business owners will take distributions transferred over from their business to their personal account, we'll actually do that loan at 100% of the deposits, and we allow those transfers from the business account coming into the personal. For your 1099 employees, then we'll usually apply an expense factor of anywhere from 30% to 50%, depending on what the business is. Obviously, we all know 1099 employees have expenses, some less than others. Some might operate from home, some are operating with higher expenses. So again, we're going to look at those individually and apply the expense factor from there. We are looking at 24 months bank statements on both programs, both business and personal right now, so we can see a nice big picture of the borrower's overall income.
Okay, so hey, Manish, I want to bring you in on a couple of things that have come through. One is, what do you see as kind of future challenges within nonQM for the remainder of 2020, Q3 and Q4?
Yeah, sure. So I think one of the challenges we're going to have to sort of address is just the evolution of these programs and how we're going to evolve going forward. It's one of these things where the economy's reopening, and we're making strides toward reopening, and we're going to have to make some adjustments to these programs as we move forward. And so, educating the investor base and having that rationale as to why these adjustments are being made, and having that correspond with, the economy reopening and us kind of stepping out of this once in a 100-year type event, which is a pandemic. So, from my perspective, I think just, kind of the evolution over time as the economy continues to evolve. So that's going to be one of the challenges. And then I think maybe the other challenge that we'll just have to sort of see is the performance of these loans having been through this stress test, which is the pandemic. One of the issues, one of the questions, investors have consistently asked pre-COVID was, hey, what does the performance of these loans look like through a stress test, through a stress event? And here we have one, which is the pandemic. And so I think, getting through this challenge with the performance that they had expected to see and we had expected to see as well, I think will be something else that we'll be watching in the months ahead.
That's awesome. And Manish, just from your perspective, what's your confidence? Because the people that are on this call are out there working with borrowers that are interested in bank statement loans or investor cash flow. What's your confidence just in the capital markets while we're still, like we talked about, it didn't quite clear through like we were hoping. Do you think we're going to see a repeat of March?
I absolutely, you can never say never, but I think just the unprecedented amount of support that's been provided by policymakers, in terms of just the amount of liquidity that's been deposited into consumers directly, but also just providing stability to capital markets, to even the agency market and the treasury market, which, are sort of, perceived to be a lot safer and a lot more secure. I think that has been just provided a significant amount of support, significant amount of confidence to the capital markets.
Yeah, I would agree with you. And I think that what you mentioned earlier, the kind of the flight to cash that happened in March, because nobody knew where we were headed, right? It was a pandemic in phase one. And I think even if the COVID continues on and we learn it's the new normal, I don't think that overnight flight to cash is going to happen again in 2020. But that was a big cause of it that not everybody was even aware of. So, absolutely. All right. So I also got a question, John, maybe, do you have any marketing support?
We do. So if marketing is available to all our approved brokers. So you'll get your login credentials from our compliance department, and you can go through your account executive for that. But to get to our marketing portal, you have to log in, and it's just about clicking here, and here we go. Let's hope my login credentials.
You've been kicked out?
I think I was timed out. Bear with me here. So,
yeah, but I'll while you're doing that, John, I'll just add that, when you become approved with Angel Oak, we will give you a username and password. So you'll have access to all these tools that will help you take the products. And then, John, you can show them what's out there.
Yeah, so our marketing department has done a really great job making this so easy for you. So we have our marketing flyers here where you can brand them with your logo, your information, and your contact information. Everything's here. Everything we covered on the bank statements earlier is here for you, and it's easy. All you need to do is put your logo here, your contact information there, and it will populate all the flyers that we have available for you. So it's a great slick tool. So it's really a great way to differentiate yourself from the marketplace. Everyone's out there saying they've got great rates, great service. This is a really quick and easy way to market yourself in a different way to the marketplace.
Differentiation. We talk about that all the time. That's what this does.
Yep. So that's just one of the marketed flyers. We have flyers for CPAs. We have flyers for investor cash flow, flyers for platinum. We have flyers in Spanish. So they're all out there for you. Scott, anything, what have you seen as far as your brokers? And one of the things we've done in the past, and we've done a great job of it, and hopefully that'll come back soon, will be, using your local account executive to present with you on your behalf to your referral source. So Scott, I'll let you kind of add a little bit more light to that.
Yeah, thanks, John. So I really think this is one of the most underutilized tools that we offer to our brokers and to our partners and loan officers, it is 100% free. And it's as easy as clicking on the flyer and customizing it with your information, your logo, and printing as many of them as you want to go out there and market these products and programs with. And as I mentioned earlier, I love doing presentations to the realtor community. I've done tons of them with my brokers and my loan officers. Feel free to reach out to your local account executive, and I'm sure they would be more than happy to come out and speak on your behalf to our non-QM products and programs. And what's really cool about that is that for the realtor community, for your referral community, you know, they're used to the presentation about the agency loans and, you know, down payment assistance. And when you're coming in and you're talking about a bank statement program for self-employed borrowers, you're talking about a jumbo program up to 90% LTV, 3 million loan amount, an investor cash flow program where you're qualifying with no income, no employment verification, it really will get your foot in the door to book those appointments for those presentations a lot easier. And the antennas go up in the room. I mean, every time we've done this presentation and spoken about these products and programs, the questions and the realtors' light bulbs are just going off. And obviously that in turn is going to get you all of that agency business behind it anyway. So again, it's an underutilized tool. You know, if I'm a broker, I'm a loan officer, I'm picking out a bunch of these that, you know, for the programs that I think I want to market the most to my community. And I'm going to probably paint the town to all of my referral sources with these flyers.
Yep. Good stuff. Okay, just a couple of things. One is I see a lot of specific questions. First, I would say, please reach out to your local account executive. We'll get these questions actually to your AE, but if you already know who that is and you've got their number, just reach out to them and they'll be able to answer them. And secondly, this is being recorded, so we're going to send out the recording. The quick quote, getting a lot of questions around it. Just play with it. It takes you just a few seconds to click on different scenarios, and you'll see if we don't have a product, there won't be anything available on the bottom. So a little confusion around that.
Tom, if I can add on the quick quote, I get this question a lot. No credentials are required, guys. You can go right on our website, get right into quick quote, price out a loan. You do not need credentials.
Yep, that's a great point, Scott. So please utilize that. It's a great tool. Everybody, all of our customers. Another question that we get that I've gotten a lot is, what are our turn times? And I will just say non-QM, each stage is, you know, the quick qual, pre-quals are going to take 24 to 48 hours, usually 24 hours, but steps of the loan itself, it's 24 to 48 hours from submission to underwriting to clearing conditions and then getting those loans closed. So getting those loans taken care of really quickly. It's a great purchase product. You know, get out there. That's what, you know, Scott is, that's why he's here to talk about that. But our turn times, we're going to be able to meet those closing dates that you're setting up. So anything else you want to add, John or Scott, just around the products, programs, or process?
No, just continue to use your account executives. I mean, we have the best in the industry, so continue to use them. Help use them to help grow your referral source. And one of the things I did want to share our bank statements pre-COVID. You know, our average pre-qual for a bank statement loan was probably in the low 300s. We're seeing almost $450,000 average on pre-quals for bank statements. So that's a pretty nice uptick in commission. So
well, and I think that speaks to the lack of liquidity in the jumbo market.
Yep.
You know, that's what's
Absolutely.
happened. Jumbo borrowers are just really struggling to find financing. So you can be the solution provider by bringing those bank statement loans to the self-employed borrowers.
But that's all I have, Tom.
Okay. All right. Well, we're right around an hour. Didn't want to keep anybody's time. Again, we have all these questions. Your account executive will get back to you answers with the questions we didn't get to by tomorrow. If you would do us one favor, when you leave this, there's just a really quick survey. If you'd answer those questions so we can get feedback. If this was a format that you like, please give us any suggestions. We tried to get a lot of the questions up front and to ensure we could address them, but gosh, I really do appreciate how many questions have come through in the last 15, 20 minutes. Manish, thanks so much for joining us. Your insight is is extremely helpful for all of us out here originating mortgages. John, Scott, good stuff. And thanks everybody for your time. Have a great day. Have a great weekend and be safe.
Thanks, Tom.
Thank you. Bye-bye all.
Bye-bye.